Hello, 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 everyone. Mike Arnold here, co-founder, Pat Trading Partners, along with Bob Iacchino. How is everyone doing this afternoon? Hey, ho, waka, waka. Market wreck tomorrow with all the bad news. Well, Walmart, woof. Last time I checked, down 8%. They guided not only lower for Q2, but all of 2023. That is brutal. Hey, then we got Kalani. Hey, what's up with Walmart after hours? Well, first we got to say good afternoon to Davey and Patrick and Jacob. And then, see, here you go. Waka Waka put it in here. Walmart bad guy down for rest of the year in 23. That's a huge guidance. That's like not just saying most companies go with a quarter, like, or maybe for the rest of the year. Like, all right, 6 months. To go the rest of the year and next year is pretty freaking bad. And we did have a double that was triggered, and this is why you use stops. You use stops, but you're going to see many more of these surprise guidance. And if companies don't guide lower, now guiding lower now I think is smart, because then when they do, they will have some at or beats. So they're going to take it brutally now, and then they can really lower their expectations so they can start beating. Unless we go into a severe recession. Hey, Josh. Good afternoon, Wavy. Yeah, here we go. See, you're putting it in here too. Pre-announced second quarter ending July and reduced fiscal year guidance 10 to 12% due to price reductions to clear old inventories. Last time it was like even down below that, 8. Hey, good evening, Anissa. Let's see. Wavy. Inflation too high. Consumers tapping out and has to limit spending. 3, Walmart and other retailers over inventory. They now have to liquidate inventories into a much weaker environment. Correct. I think the consumer still has a little room left, especially since they're starting to leverage their credit cards, but it's not good. Again, we're already, I think, either in a recession or on the cusp of it, no matter what they say. And you can't be the White House. Yeah, let's just redefine definitions. Let's just do this. It doesn't matter. You know what? I'm going to redefine inflation. I'm the new person with CPI, and I'm going to only include the things in CPI that went down month over month. So there's my new definition of CPI. So therefore, CPI will go lower each month because I changed the definition to only include any items that went lower in the last month. Solved. I solved the inflation problem. Good day, George. Apple earning report will be interesting. No way they give good guidance. Apple's notorious for not giving a lot of guidance outlook, though. That's what's going to be interesting. They like to play stuff very close to the vest, which I sometimes think is to their detriment and will come back to bite them in the long term. But that's just my thought. So let me know what you think of my new definition of inflation. We'll go with that one. By the way, if you are new here, please do consider subscribing, ringing that bell, and hitting the like button longer term. Subscribers, please, hold on one second. Please do subscribe, ring the bell, and do everything else. Just want to check on something here. Where are we? There we go. All right. Had to adjust some settings real quick. All right. So, oh boy, we were pretty much, it depended on the market you were looking at, but pretty much range bound day. S&P finding that key support at the 50 handle right there. So, but we had some disastrous numbers. Now, as I said this morning, Chicago Fed National Activity Index came in pretty much where the last was revised to, but it was expected to be higher. Dallas Fed Manufacturing Index, a complete disaster. And if you read the report, a complete disaster. I mean, that's already in full-blown full-blown recession territory. And then everything else is just minor. But tomorrow, here's what we're looking at tomorrow. House price index right at 8, 755 Red Book. Remember, Red Book's not inflation adjusted. But the big is going to be consumer confidence at 9 a.m. So we'll get to come up with our levels before the open tomorrow, and we'll prep ourselves for the Asian European session tonight. But before the open, we'll come up with our levels to refine it, and that's could potentially be a biggie. A biggie within the context of Fed is on Wednesday. And then even you have more stuff on Thursday, including like Apple earnings. So you got to take that with a little grain of salt, which it could move things, but it'll probably then lose its efficacy later on in the day because people will reposition themselves for the Fed. By the way, you also have Richmond Fed, smaller manufacturing index, and smaller service index. But let's see if that minus 11 from previous for Richmond Fed and services index was at 0. Let's see if that tips into negative also. And you have the Dallas Fed services index. Now the Richmond is at 9. The Dallas is at 930. So we have a plenty to keep an eye on tomorrow, which could induce a little volatility. But again, major volatility coming Wednesday afternoon and potentially Thursday and even Friday. Mixed, the mega caps pulling back a little, but that's not big given today. Oil on the bounce, oil stocks up. We have financials up a little. This was a rotation out of some mega caps into commodities, but everything's just a reposition for what's coming on Wednesday. Still 75 basis points favored for Wednesday. Still right, just barely. I just essentially this and the combined dealer gamma is essentially neutral. So just keep that in mind. We're at neutral gamma, so any further rallies will be muted. If we sell off, it can get amplified still to the downside as we move into further negative gamma territory. Again, after the close today, I have not peeked at a lot of stuff. I was looking at some Walmart stuff with that guidance. So, and there's not a lot of biggies. I got to look at Logitech after. So that's going to be the key thing I'm looking at. And then going into tomorrow on the open, as I said before, UPS, Coca-Cola, McDonald's I'll look at GM. Those are some of the big ones I am keeping an eye on tomorrow morning. McDonald's consumer-driven, Coca-Cola inflationary, and sort of a consumer staple and consumer-driven. UPS from a business delivery and consumer standpoints, and so many there's so much stuff is still done with online, and that does affect UPS. So we should actually hear from them with their guidance, how that is looking. So that's going to be interesting tomorrow. So we could have some things that minorly affect the market if they give major guidance revisions moving forward. Because you can see what Walmart did. And Walmart's a mega cap. Let's just peek at Walmart real quick first. Walmart, we had that double. Again, this is why you always use stops. Always trade with stops and know where your stop levels are. Trading, wow. I mean, this is a brutal move. This is absolutely brutal on that guidance, but it's not surprising. From the close, we're sitting down 8.7%. So this definitely, if it does open tomorrow below essentially 122, it's pretty much done. Or if it trades below 120 right on the open, it's done. People I know will exit positions going into the close. But that's why you always know where your stop levels are. Did not hit the first target, but again, there's no way you can know a company's going to guide lower until they do. That's why, again, you got to trade with stops. And that's why nothing can be 100%. So here's what I'm talking about. This was up a little before Walmart's guidance. I saw Walmart puts on my options activity, 125 puts for 100 contracts at 0.8. Interesting. I was not watching that. Pretty much neutral day in the S&P futures. You can see here, let me put up the volume. Very low volume day. I mean, it's higher than a couple of low volume days, but this is a very low volume day. Cycles are rolling over finally on the daily. Let's just peek at the weekly. a weekly getting to the verge of rolling over. Still inside day from Friday. And here I told you I was watching this 39.50 area, little test of that, and then a rebound below. Again, that's my key for overnight. 39.50, then 39.29. If we do break above 39.75, I'm then watching roughly where the prior high was and the prior harmonic, about 39.89 to 39.91. So that's what I'm keeping an eye on. Still right at the flattening out 4-hour rotation zone. So if we break below here, remember just below this 39.29 at about 39.20, this is a support zone. My first zone, we have the rising 4-hour 50 period, and we have the 50% harmonic from the sell-off levels. But I, again, can't get overly bearish until we start breaking below. I mean, I can get minorly bearish, but not overly bearish until we get a below 3,900 roughly. 3,900 to 3,905, but we really start getting below 3,900. Then we've also broken the key resistance becoming support, and we've broken that on a closing basis. My wife didn't let me trade today. Well, you don't have to trade every day. That's sometimes good. Maybe it's a good strategy for some people, especially if you're newer, if you don't trade till after the Fed meeting or even after Thursday. Let some stuff, there's always another day to trade. So keep that in mind. Walmart, increasing levels of food and fuel inflation are affecting how consumers spend. Well, that's a shocker. Imagine that. Imagine that. NASDAQ pulling back, you know, with that right now about 74 basis points. But we found this key support right at the daily rotation zone and that level I listed, that 12,271 area. You can see it here. You can see it right there. So what I'm watching overnight now is we have, since this was a minor level, it chopped around behind. Yes, this was a valid double that quick pop and got stopped with the choppier day. So can't get minorly bullish until above 12,387. Can't get bearish until below 12,773. We break below 12,773. I'm keying off the 37.5% harmonic with the bottom of the rotation zone to about 12,154. So 12,100 to 12,154 I'll watch for. Bottoming move we get is even a 4-hour close above there. I'm shifting to bearish mode to target the bottom of this channel. Okay, with daily cycles easily rolling over now and weekly at the top. It's going to get very interesting this week. Inside day in the Dow. So Dow holding the little harmonic level key support, could not break down below this 31,770 area. So below there, that's minor bearish and then more bearish below 31,640. This is my more bearish level. That's a little higher. That's a little too high. That's right there. And I can't get bullish until above 32,111. Other than that, it's a range bound. And same story, daily cycles rolling over, but Dow holding up nicely. And also, as I said before, inside day, which is just reduced volatility. We might see some, again, unless consumer confidence comes out really disastrous tomorrow, we could see more tight trading going into the Fed. At this point, with cycles consuming down, and unless we get something weird with consumer confidence, I'm now choppy to slight pullback going into the Fed meeting. Russell up. Russell was positive. Dow was positive 3 basis points. Russell positive 44 basis points, holding the 1800 level. On a break below there, 1772. On a up move, again, can't get really bullish until above about 1820. DAX still in consolidation. So nothing to really do. Breakdown was now at the bottom of the rotation zone and the low from the 21st of July. But we've got the stop reduction on that double. So nothing else to really do but sit on hands with the DAX. Crude, nothing else to do but sit on the hands for the time being. The bigger play is back above 100, about 101. Actually, the bigger play is above 101. Everything else is just range-bound trading. Or, again, now breaking. We've confirmed this, by the way, is not a double bottom because of this bottom, but there's two bottoms in the same vicinity. So you break down around this 92.90. That is a bearish move for me to test this prior low from the 14th of July and then watch for that close below the 200. Natural gas just keeps chugging. Again, you still have the issues with the pipeline over there. I don't even know why anybody believes anything that comes out of Russia's mouth at this point, but that's going to be Germany's problem for the winter. Next level, remember we closed above the 62.5, so next statistical probable level is this 912 area. It's getting a little overdone, so at some point, if from a long perspective, I'd be raising a stop pretty aggressively, especially if it starts closing below about 838. But other than that, you got to give it a little room. Gold, we got the pullback still watching now for the next gold play, but nothing set up strong yet. Notes, really quiet day, inside bar from Friday. If we break down below today's low, keying off of 118.30, which is a rising rotation zone and 25% harmonic to watch for major support and the prior resistance becoming support level to the upside. And we might not see anything until the Fed, a major move in this until the Fed meeting, but we start breaking above 120.11 is my minor breakout level and 120.20 is my major breakout level. Dollar index inside day, so again, everything just pausing. Breakout level for that is 107.20. Breakdown level is below 106. VIX, remember we had that gap up and then proceeded to pretty much reverse all day. Even with the mixed markets, I mean, the S&P is what? At this point, pretty much flat, 6 basis points. NASDAQ was the only one that really got hit. Even the Dow with Walmart is at flat. So still not much fear. I'm interested because the cycles are at the bottom on the daily and at the bottom of the weekly. So if we start getting some fear coming to this market or people buying volatility, we could see a pretty quick ramp up in volatility. But got to sit on the hands with that until it triggers. Where else do we have? I got chopped in that double on NASDAQ. Yep, it happens. And remember, this week will favor some probable choppy action until the Fed. You got to trade the probabilities, but that's why you have probabilities and nothing's at 100%. You know, there's that slightly over 30% probability that it won't work, just like the double on Walmart. Could we know that they were going to guide? No. I mean, I guess somebody did, as Wavy put in. Wavy put in a 50% gain on the Walmart options at this price. Somebody was betting on something. Let's see. We got information from Christoph. Gazprom reduces supplies to Nord Stream 1 from 40% to 20%. Means Germany out of gas somewhere around February. I knew they were going to run out this winter. I did not know it was February. And Russia's going to keep toying with this. So you know what? If Germany was smart, they'd look to really get their head out of their butt with all this green stuff they're doing and get on the nuclear powered train and revamp their nuclear reactors. They need to start curtailment soon, which will only go scaling back industrial activity, which again is going to lead to more issues. Well, see, Chris, you got to tune in on time, Chris. No, we haven't talked about the spiders. I'll jump to those now. Nothing's really changed. Nothing has really changed. We have a proper shoulder in where we can project this now because this broke the shoulder. I need a close below this, though. I'd really take just a close below about 392, though. So you have shoulder, left shoulder, head, shoulder. It's well formed. So you start getting that below 392.50, 392.60. Your targets are 389.75, 387.80, 385.87. You break above 396.70, watch for retest of the high levels, and that if you got back to these high levels, it would invalidate this potential head and shoulders. That's about it. Qs, we got a very weak right shoulder triggered right here with the horizontal breakdown and then bouncing back a little here, but that is triggered. So next target's 296.50, 294.50, 292.50. What invalidates it at this point, you got to keep your harmonics not yet. I mean, if you want to be aggressive, you can take it from here. So a close above 304.65 or a trade above 306 invalidates it. If you want to go conservative, you go from where it triggered, and you'd be using a close above 304.85. So that's where that sits with the Qs. Tesla, little gap up, quick gap fill, and then just a nothing day. And that's just a 2-day pullback. Cycles are at the top, but again, I can't get bearish at least until we get below 70, 75, and even more bearish after we fill the gap. But start getting back below 775 and into the daily rotation zone, the gap fill will be in play, and that gap fills to 742. The only bullish case is you got this nice little 4-bar flag pattern pulling back to the 4-hour rotation zone. So if it holds 796 and rotates back up, it could be a potential very short-term long play. But again, that's risky with daily cycles at the top and weekly cycles at the top. So you'd have to monitor your stop levels very closely. Well, that's good. You had to play range bound for the most part for the 1 and 5. Speaking of crude, is there a potential head and shoulders oxy on the 4-hour? There is a potential. Come on. There we go. There was a potential head and shoulder. We'll take a look at that 4-hour. There's a significant potential head and shoulder where I'm still waiting for this horizontal neckline to break, although that's going to get invalidated pretty soon. That's on the daily. On the 4-hour, is there a potential head and shoulder? Are you talking this? Is that what you're looking at? Shoulder, head, shoulder, and it would not be if that's what you were looking at. Why? Because of this move before it. Remember, this was the move that came down, so this is where it'd have to form from. At least the head would have to form from here. And this is horribly sloppy if you're trying to trade. This would be if you're trying to trade this as a shoulder, this is a head, this is a shoulder. No. All you're trading now is a breakout, close above the 50. Your next target, going with oil being strong, is about 66.60. With the key stop being somewhere below the breakout zone. So you could easily use the 4-hour rotation zone for a stop level. But no. NASDAQ 4-hour head and shoulders. Yeah, you could trade it like that. I just really don't like this head. With that little reversal pattern, I'll put the levels up, but that's good. That's a lower probability one. But we can map it out for the targets. I really don't like a double head. The double heads are lower probability. But for the continued pullback, it's essentially the breakout zone, 12,195, 12,104, and then 12,12. Russia is winning. The West strategies to combat them are inept and feckless. I pretty much agree. Yep, Amazon going down on with sympathy because of the Amazon consumer, and that's a pretty big drop. I mean, so funny. It's pretty funny. I mean, you move above the 62 and a half, you hit that 87 and a half, and now they're just coming back down in sympathy. So, I mean, the only bullish play now is for that gap fill play. Other than that, would not touch it in this range. Can you take a look at Beam? Boy. I just want to see the overall. I mean, this is daily's rolling over, caught on the rotation zone, weekly at the top. Yeah, if you're trying to play for a long side, it hit the rotation zone, but your cycles on the daily and the weekly are against you. So I bet on limited upside and downside move. Downside move, I'd be watching for support about 55.53 to about 52.51. Let's see where our retracement takes us. Doesn't matter which one you use. It's going to be an area. That was the prior double. Yeah. 54.62 to 55.43. Oh, so that would be the area I'd be watching for support if it breaks below today's low. But given these market conditions, unless this thing can really get another blast off move, if it can, the problem is you have a minor, nearly a clear, advanced clear path, but not quite. But you have a lot of stopping points in here, and with cycles at the cycles rolling over, I would be really hesitant. And if you're already long, there's that double which unwound. But then if you're long again, I'd keep a tighter stop below today's low. Because if it can't get up, and remember, your key area for shorter term stuff, Christoph, you're going to be watching the between this 50 and the 62 and a half for a potential rollover play unless you get a close above 66.47. Close above 66.47, I'd be watching for it to retest the highs. US 100. Again, you're essentially the S&P 100. I don't know what time frame you want, but it's gonna trade like the OEX. Your key support. See, you got that same issue. I'll map this one out again. I don't like that head and shoulders because of the double head, but we can map it out for your targets. It's trading very similar to the NAS. So your target's at downside 12,175. Or this is the NASDAQ 100. Sorry, I didn't mean the OEX. I meant the NASDAQ 100. 12,082 11,991. So this is the NASDAQ 100. You can't get bullish until above 12,470 on this index. It's triggered that sloppy head and shoulders with the double head. I'd be watching for your major support coming in 12,175 to 12,132, especially if it trades lower tomorrow going into the Fed meeting. That pattern is off the table, though. That pattern is off the table, though. If you get a close above 12,510, you get a close above 12,510, then it favors 12,615 to 12,670. Thanks, Mike. Because of you, I am confident enough with my levels to sell Amazon at 125. Was waiting for a better entry price. Money making Mike came through again. Well, the whole point to that is not me. It's that you're learning levels. You're learning to trust your analysis. You're learning to analyze the charts. And that's what I want everybody to learn. That's why I'm here. I walk through things to give you my thoughts and show you what I'm doing as I'm doing it. Because then you get to see a thought process which is repeatable. And then you can apply your own stuff to your own charts and build that confidence over time. And learn, and I hope you've also learned to identify target areas and stop areas, because those are critical. Enough people don't focus on that. But Janet Yellen spent the weekend saying how strong the consumer was. Look, they're not going to come out. First of all, I think most of them have their head in the ground. All right, they're like ostriches, and then they're shocked. Just like the thing, inflation transitory. Oh, we got that wrong. It's going to be in no recession. Oh, we got that wrong. They're not going to give bad news. And I think they do more damage by not doing that. But especially since Yellen's essentially it's a political role. So they're just gonna think that if they say it enough, it's like if you repeat it enough. I am wealthy, happy, and thin. But then you eat like 5 pies a day and spend all your money on junk, and you know what? Then you wonder why you're fat, broke, and unhappy. You can keep repeating a mantra, but if you don't change your behavior, nothing changes. You got to eat right and exercise and save some money and learn to invest. So just repeating a mantra, it's like what they're doing. Oh, consumer is healthy, no recession. Consumer is healthy, no recession. If we say it enough, maybe everybody will believe it, even though they're racking up more credit card debt. I'm getting to the point, though, it's going to get, consumers, I think after the COVID stuff, this is the first summer with really, you get more restrictions fewer restrictions in the last couple of years. So the consumer is still going to party a little harder and spend a little more, even if it's on credit card, and then really got to clamp down this fall. So that's what I'm really watching for. Weather starts turning, you get more into fall and winter. The holiday shopping season will also be very interesting. Good call on Sam to the upside. Well, again, I did not look at Sam today. Remember, if you're playing this to the long side, you got some support now. Coming in here, you got to manage these positions tight with the Fed coming up. Okay, this is not the time to get like, hey, let's just give things a ton of room. You are still in a little more of an advanced clear path up here, but I'd be managing this with a tight stop, especially with cycles at the top on the daily and at the weekly going into the Fed meeting. So just don't take moves for granted at this point, because you can see what can happen either with guidance, either with news coming out. And something like Sam, we've got the short-term bottom coming in, but we don't have a proper long-term bottom just yet. We're still watching for a longer-term bottom. Do you think this week we are going to crush? I think this week, it's hard to predict. If now I have to make a bet with daily and weekly cycles rolling over, I have to favor a break to the downside. It's all going to depend on Fed meeting, not the rate hike, unless they do something shocking. Fed meeting and the big boy earnings. The big boy earnings. I can't stress this enough. And when I say big boy earnings, tomorrow will sort of get interesting with Microsoft and Alphabet. Tomorrow after the close. But so you have the Fed meeting, and then look after the Fed. I mean, you want to talk about big boys, Amazon and Apple. I mean, Apple, a mega cap, that's going to be very interesting. And Amazon, because the consumer branch, I mean, and if their web services is weaker, if web services is weaker and they've already been getting hurt with consumer spending before this, remember, if you looked at their last earnings report, it wasn't terribly strong for the consumer. So then what bailed them was their web services. So depending on that, if these are poor or not, or the street doesn't look on them favorably after the Fed earnings, it could be very interesting. And then we have more announcements on Friday. So I have to err to the side of playing for downside on breaks, but we have a lot of support. We start breaking down below these key support areas, even in the NASDAQ. I cannot get overly bearish until we really start getting below 12,100 on the NASDAQ. I can get minorly bearish, but I can't get overly bearish on the NASDAQ. I can't get overly bearish on the S&P until below 3,900. I can't get overly bearish on the Dow until we break below about 31,475. Why? Because we're slamming into support. Now we start getting through those levels, then I start playing for the lower end of these channels. Oh, what was I preaching? I don't know. I'm just trying to give good information for everybody. And again, you know what? If you haven't already subscribed, please consider it and share this with your friends who still might be watching some. They can watch those other channels. I could care less what people watch. I just maybe help them, steer them in the right direction with a channel like this, that at least they get something else to balance out some of the other stuff. Yeah, Apple, SPX, you know what? Thank you for punching in all this information. Everyone that puts in the information about key figures, about releases, especially some stuff that comes out I might be talking about. Because I don't sometimes have this information right in my fingertips, and I really do appreciate it. Like Wavy putting in Apple's S&P weighting at 7.1%. So that's a biggie. That's a biggie. That can move things. And look, the NASDAQ, thank you, Wavy, again. NASDAQ weighting 13%. So you get Apple with even a at or a slight beat, but then if they do guide lower or they hint that stuff's not so good, you could see an interesting stuff. Now, let's say we do sell off after the Fed meeting and Apple really beats and guides strong. You could see another bounce back play before that mutes the rollover. Still, long term, remember, this is where trading bear markets are so tricky, because long term, I'm exceptionally bearish. Exceptionally bearish. You got to trade these things tactically because they can hold up a lot longer than you think. That's why bull markets are so easy to trade compared to bear markets. That's why everybody thinks they're a trading and investing genius during bull markets. Because you could be wrong and be right. Because a rising tide lifts all boats. A rising tide lifts all boats. So naturally, when you're in a bull market, even let's say something has bad earnings, gaps down, it recovers pretty decently, unless something really has gone wrong with the company. So you could be wrong but right in a bull market. In a bear market, the opposite is true. You can be right but wrong in the short term. You can be right overall on the bearish call. Hey, we're going into a recession. We're going into this. We're going into earnings contraction. We're going into companies are going to guide lower and miss earnings reports. But the market can hold up a lot longer than you think. And the market can do crazy things in bear markets. And they can leave you scratching your head like, well, gosh darn, where did that move come from? Why are people so friggin' bullish buying everything when we just had Walmart guide lower for the next 18 months? And then you're left like, well, I guess it was just Walmart. No, see, that's what's so hard. But that's where you have to learn. Another crazy move today in KOS after settling with Apple on the patents on the AirPods. I did not look at them today. Well, I'm sorry I was off at by $10. It's still, if big caps beat earnings, the market will rally. It's not so much they beat earnings. Again, if they beat and don't change guidance, they could rally. If they beat and change forward guidance lower, it's going to be based more on the guidance. All right. Bull market is easy. Peloton was 170 in bull market, now worth $9. Yes. And a bull market with Fed pumping easy money is really easy. You just buy stuff. And you buy the momentum stuff. You buy the crap stuff because it keeps getting pumped with cheap money. Well, yeah, but it does still mean something because once we watch Walmart. Walmart will be a great example of potential earnings contraction if they're guiding there. So their PE can still go up. If their price stays the same, let's say their price stays in this range. Okay? What happens if they reduce their earnings? This right now, before it gapped down, was 28. Okay? So let's just call it 25. Now, let's say they stay in a range, but their earnings get worse, and worse. What happens to the PE ratio if their price stays in a range? It goes up. So in order for it to justify the valuation, the price has to come down. That's where we start getting the price compression. And the longer that goes on, that's where the bear markets can grind things lower. Oh, what I meant was trading view price was incorrect. Quoting the SAM price closed at 363. Thanks for the clarification. Did I say it wrong? Because their closing price is 373, 376. It's updated now. Yeah, it looks like it was wrong. I remember that being a smaller bar. Thank you. Yeah, that was updated. Thank you, Paul. Sorry about that. I did not realize because I did not look at Sam today. But that's a nice follow-through bar. Same thing, though. I'd be moving up your stop. Nothing really changes. If you want a tighter stop area, I'd be watching. If you want a tighter stop area, I'd be watching that 366 level. But, that's just, I hate when numbers are wrong. Yep. Thank you for the reminder, AB. Amazon's earnings should be interesting. Now it is correct. Thank you, Paul. Again, sorry about that. Gosh darn trading view. Sometimes that happens. It happens on all trading platforms, though. That's why it's handy to have multiple data sources. So if something looks off, you can always double check it. It's just hard when I'm doing a live stream. All right. Well, there you go. Thank you for the information. Remember, if anything you see is wrong or you think I made a mistake or I overlooked something, Just like you asked about the Head and Shoulders on the NASDAQ, and I went about that double head, but we put it on there. Don't be afraid to put it in the chat. This is a community, and I make mistakes. I even make mistakes trading. You know, I could put in a stop wrong. I could put in a level wrong. It happens. We all make mistakes. The whole point to this community is to be here for each other and help everybody learn to be better traders and investors. So if you're hiding out in the background, because there's a lot of people who hide out in the background, don't be afraid to type into the chat. I don't bite. I might go on rants at times, but I do not bite. Let's see how the Fed comes Wednesday and GDP Thursday with key earnings report. Yes, we do have GDP on Thursday also. I mean, this is end of the week's backloaded. The end of this week is going to be very, very interesting. It's going to be, you have to be on your game and trading tactically and managing stops, and especially if you're in it for the shorter term, analyzing your key levels. You are welcome, Chris. Hit the bell so you don't miss the daily streams. Agreed, Wavy. Apple earnings will move the market. Yes, Apple earnings will potentially move the market. If something or what guidance comes out weird, or they either have a big hit or a big beat or a big miss. If it's just in line and they don't guide, it might not move the market. All right, it's been a long live stream today. I gotta get back with partial disappearing Mike. Where's partial disappearing Mike? I got my eye of the world. The eye of the world. Here you go. Custom tied eye. So I'm the big all-seeing eye today. With that, I will chat with everyone later. Have a wonderful evening. Please consider joining me for the open tomorrow, and I will talk to everyone then. Bye for now.